Welcome back to TalkTickers. It's October 29th, 2024, and we're going to be diving deep into McDonald's Q3 earnings call. A call that is being overshadowed, I think we could all say, by this recent E.coli outbreak.
Yeah.
McDonald's stock, closed down slightly today. But I think that the bigger story here is the shadow that's cast by this whole public health crisis.
Yeah, it's certainly a situation that's got everyone on edge, especially when you consider McDonald's long history of being a leader when it comes to food safety.
Right.
So this whole incident really raises a lot of questions and concerns. Concerns that go beyond just, the immediate impact on their financials.
Absolutely. So today we're going to be unpacking this earnings call. We're going to try to understand how this outbreak actually impacted McDonald's Q3 performance. And more importantly, we want to know what their strategy is going forward. What their plan is to regain that trust and move forward.
Yeah, it's all about understanding the long-term implications here. Separating that short-term noise from those really crucial signals.
Yeah. Let's start with this E. coli outbreak. As you know, it's been linked to contaminated onions from a single supplier, Taylor Farms, and it didn't directly affect Q3 numbers, this outbreak, but it was a major, major focus during the call.
Yeah, and McDonald's CEO, Chris Kempczinski, he really addressed this head on right from the start, began with a very sincere apology and emphasized their commitment to doing right by their customers. And then he went on to detail the swift action that was taken, identifying the source, removing those onions, and then halting all sourcing from that particular Taylor Farms facility.
And they really emphasized over and over that food safety is non-negotiable, even going so far as to halt the production of quarter pounders in the areas that were affected, despite the fact that those beef patties tested negative for E. coli. So it sounds like they're taking every precaution to reassure the public, even if it means, temporarily pulling a flagship menu item.
Yeah, I think it demonstrates pretty clearly that they're prioritizing safety over those immediate profits, which could definitely pay off when you look at it long term in terms of rebuilding that trust. Right. So, now shifting gears a little bit to the actual Q3 performance itself, we see a little bit of a mixed bag.
Right. On the positive side, U.S. comparable sales were positive.
Yeah.
And that's especially notable, I think, because we've got this broader kind of struggle going on in the quick service restaurant industry.
Yeah.
What do you think drove that success in the U.S.?
I think it's a combination of things. They really addressed this need for value with that $5 meal deal. And they strategically combine that with really strong marketing. Think about that collector's edition campaign. And then they had menu innovations like that Chicken Big Mac, which are really popular. So I think all of that together drove some significant check growth for them.
It's interesting. They also gained share with lower income consumers for the first time in over a year. So that $5 meal deal, you think, really hit the mark?
Yeah, I think it definitely resonated with that segment.
But what about internationally?
Unfortunately, international sales were negative, which reflects, these global economic pressures. I think a lot of consumers out there are feeling that squeeze right now.
Yeah.
And it really just highlights how crucial it is for them to get that value proposition right, especially when times are tough.
Yeah, it's a balancing act. Finding that sweet spot between, really appealing offerings and keeping things affordable. So how do you think McDonald's plans to move forward from here?
Well, Kempczinski expressed a lot of confidence in what they call their accelerating the arches strategy. It's a three-pronged approach. They're implementing this in the U.S., and they're aiming to replicate it internationally as well.
Okay, so let's break down these three prongs a little bit, starting with a strong value platform.
Mm-hmm.
What did that actually look like in practice?
Well, it's more than just simply offering low prices. It's about having a mix of what they call their everyday affordable price menus. They call that EDAP for short. Alongside compelling meal bundles, we're seeing this with initiatives like the Mix Smart in Germany, the Savor in the UK.
So affordability is key, but it sounds like choices is also important. Now, what about menu innovation? We've already seen this success with the Chicken Big Mac. What else is in the pipeline?
Well, chicken is definitely a huge growth area, and they're taking that McCrispy global. They're aiming to have that available in over 70 markets by the end of 2024. But it's not just about chicken. They've got the Big Arch. It's this larger burger that they're piloting in Portugal, Germany, and Canada. And it's exceeding expectations,
right,
which shows that, higher priced items can still do well if you've got the right appeal.
So they're really targeting different price points and different preferences. How about the marketing side of things?
Well, campaigns like that collector's edition that we mentioned earlier, they prove that McDonald's can really generate that excitement. and drive those high-margin sales. It's about creating buzz, creating desire, even when there's economic uncertainty.
Yeah, it's a really multifaceted strategy. How effective do you think this is going to be?
Well, the success in the U.S. definitely suggests that the strategy is working. But consistent execution on a global scale is going to be critical. They need to adapt this framework to different markets. They need to factor in local tastes, local economic realities.
Yeah, adaptability seems like it's really the key here. But it's not all about numbers and strategies. McDonald's also highlighted their commitment to social impact during this call.
Yeah, absolutely. They talked about supporting hurricane relief efforts down in the Southeast U.S. and exceeding goals for their youth employment programs. And they also talked about fundraising for the Ronald McDonald House Charities. This is actually the charity's 50th anniversary this year, which really speaks to that long-standing commitment to social responsibility.
Right. It's a powerful message, about balancing financial success with these positive contributions to society. And I think this connection to community could be really crucial when it comes to rebuilding that trust after this E.coli incident.
Yeah, for sure. It highlights the fact that they're trying to be more than just a business. They want to be a responsible member of the community.
Yeah, I think that's important. So McDonald's is facing a double challenge here. Regaining trust after this E. coli outbreak and navigating a really tough global economic climate. They've outlined their approach to regain momentum in the U.S., but that international market, it presents a whole different set of hurdles.
Right. Each market has its own unique dynamics, so understanding those nuances is going to be absolutely crucial for McDonald's if they want to succeed on a global scale.
Absolutely. In part 2 of this deep dive, we're going to go deeper into those international strategies, and we'll take a look at some of the key indicators to watch in the coming months.
Welcome back to TalkTickers. We're continuing our deep dive into McDonald's Q3 2024 earnings call.
So we just discussed how McDonald's is navigating, kind of some choppy waters right now. Everything from that E. coli issue to the uncertain global economy. They're accelerating the Arch's strategy. It seems to be their guiding light. But how exactly are they tailoring this approach to all these different international markets?
That's the million-dollar question. Let's take Europe as an example. In France, they've launched this McSmart menu, really trying to address those affordability concerns head on. And early data suggests it's actually helping to turn the tide there. They're also targeting families with like a €4 Happy Meal, so really appealing to, that key demographic.
Okay, so value seems to be like a common thread here.
Yeah.
But they're really adapting, the specifics to each market. What about the UK?
Well, the UK also leans pretty heavily on value. They've got the return of their 3 for £3 menu, and they've got a 2.79 breakfast bundle. Plus, they've managed to capitalize on that viral success of the Grimace Shake, which, was a marketing tactic that started in the US, but it saw, near sellout success in the UK as well. Remember all those memes?
Oh, yeah. Proof that a good idea can really travel well, even across borders. But even with these shared strategies, each region probably faces its own kind of unique challenges.
Absolutely. There's no one-size-fits-all approach. So take Germany, for instance. They've seen some success with this McSmart platform, but they're actually expanding it even further with an even wider range of affordable meal bundles, kind of at various price points.
Oh, okay. So more options, more flexibility for the consumer.
Precisely. It shows that they're recognizing that even within one country, different consumer segments, they've got different needs and different preferences.
Yeah, that makes sense. So it really sounds like there's an emphasis on fine-tuning and experimenting, really kind of learning from what works.
Exactly. And it's not just about these price adjustments. They're also really focused on operational excellence. They want to enhance that perception of value. So in the US, for example, they've been really focused on improving that speed of service and their digital execution. And that's actually led to record high customer satisfaction scores and reduced drive-through wait times.
Wow, so a more holistic approach to value.
Yeah.
Combining affordability with just a really seamless customer experience.
Yes, exactly. And this focus on operational excellence, it extends internationally too. They've actually reported increased customer satisfaction scores across all of their major international markets.
Oh, wow, that's encouraging to see.
Yeah.
It really shows a dedication to improving that customer experience no matter where you are. But we can't forget about their, internationally developed market segment, what they call IDL for short, which includes regions like Latin America, the Middle East, and China.
Good point. Yeah. Performance in Latin America has been pretty positive, actually. However, that ongoing conflict in the Middle East, it continues to really negatively impact their business there. And until that situation stabilizes, they're anticipating, continued challenges in that region.
Yeah, that's understandable, given the circumstances. Now, how about China?
Well, China continues to be a tough market for them. There's weaker consumer sentiment there, reduced spending, and all of that is contributing to, negative performance there. It's a very complex market. It's got its own set of economic and political factors at play.
Okay, so a real mixed bag internationally. But there are some bright spots. And it seems like there's a clear commitment to adapting that strategy to, whatever those local contexts are. What are some key indicators that we should be watching as McDonald's, continues to roll out this accelerating the arches strategy globally?
Okay, well, first, we need to watch how successful these refined value platforms are. Will they consistently attract and retain those customers, especially those price-sensitive consumers? And can they do that in all these different markets?
Yeah, that's a big one, especially with this economic climate. What else should we be looking at?
Well, second, keep an eye on the performance of those menu innovations. Will things like the McCrispy and the Big Arch really resonate with global consumers? It tastes very widely. So their ability to adapt those offerings is going to be really key.
And of course, rebuilding that trust after that E.coli incident is paramount.
Absolutely. Maintaining that strong brand image and regaining consumer confidence is going to be essential for their long-term success. And finally, we need to monitor their expansion plans and really watch that return on investment for new units, particularly in the U.S.
So making sure that growth is sustainable. It's not just rapid expansion for expansion's sake.
Exactly. There are a lot of moving parts here. But one thing is clear. McDonald's is actively adapting to a changing world, and the next few quarters are going to be crucial in determining whether these strategic adjustments are actually going to pay off.
Okay, so we'll be watching closely. Now let's shift our focus to the financial side of things. McDonald's reported adjusted earnings per share of $3.23 for the quarter, which is a slight increase compared to last year. But what does that number really tell us about their financial health?
Well, to understand that, we need to look a little deeper into their financials. We need to dissect their performance, examine those capital allocation priorities, and really explore what all of this means for their future prospects. And we'll do that in part 3.
Welcome back to TalkTickers for the final part of our deep dive into McDonald's Q3 2024 earnings call.
Yeah.
We've covered that E. coli outbreak, their mixed Q3 performance, and their global strategies for moving forward. Now let's examine those financials a little bit. They reported adjusted earnings per share of $3.23 for the quarter, which is a slight increase compared to last year. But what does that really tell us about their overall financial health?
Yeah, that's where we separate the headline number from the real underlying story. While $3.23 adjusted EPS is a slight increase, it's important to remember the context here. This was achieved in spite of, that challenging environment that we've been talking about, which really highlights the resilience of their business model. Moreover, they generated over $3.8 billion in restaurant margin for the quarter.
Okay, help me understand that a little bit. What exactly is restaurant margin, and why is it so significant?
So think of restaurant margin as the profit that McDonald's makes directly from its restaurant operations, after accounting for costs like food and labor. So it's a really key indicator of their core business profitability. And achieving $3.8 billion in, this current climate, that's quite impressive. It really speaks to their operational efficiency.
Okay, that makes sense. And their year-to-date adjusted operating margin of nearly 47% also seems to point to, a strong financial foundation. What do you think contributed to these positive financial results?
Well, several factors were at play here. They managed to reduce their G&A expenses, that's their general and administrative costs, primarily because of lower incentive-based costs, and a continued focus on just, essential operating expenditure. So basically, they're keeping a tight rein on that overhead. They also continue to invest strategically in their transformation efforts, prioritizing initiatives that drive long-term growth and efficiency rather than those short-term gains.
Right. They also mentioned returning value to shareholders, which I think is always, a point of interest for investors.
Yeah, for sure. In September, their board approved a 6% dividend increase, and that marked their 48th consecutive annual increase. So that's a really strong signal of confidence in this accelerating the arches strategy, and their commitment to delivering long-term profitable growth for those shareholders.
Okay, but beyond just announcing that increase, what does this tell us about, the dividend sustainability and its impact on shareholder value?
Well, that's a good question. While 48 years of consecutive increases is impressive, the sustainability of that really depends on future earnings growth and cash flow generation. That 6% increase, it signals confidence for now. But investors are going to be watching closely to see if McDonald's can deliver on its long-term growth targets to really support that continued dividend growth.
So it's kind of a wait-and-see approach.
Yeah.
But their track record does provide some reassurance. Looking at the big picture, where does McDonald's stand financially? And what can we expect, moving forward?
Well, I think it's safe to say that McDonald's is facing headwinds, no doubt. But they're also demonstrating adaptability and resilience. Their focus on value, menu innovation, operational excellence, strategic investments, all of that positions them well to weather the current storm.
But some challenges still remain, right?
Oh, of course, the E.coli incident has had an impact on consumer confidence, and that global economic climate is still pretty unpredictable. So how effectively they address these challenges and really execute on their strategy, that will ultimately determine their future success.
Yeah, so it seems like they've laid out a solid plan. But the proof will be in the pudding. This has been a deep dive into McDonald's Q3 2024 earnings call. We covered that E. coli outbreak, their financial performance, and their strategies for future growth. Hopefully this analysis has given you some valuable insights.
And as always, we encourage you to stay informed about McDonald's progress. Keep an eye on the factors that may influence their performance in the months ahead.
Thanks for joining us on TalkTickers. Until next time.